Are stable coins even stable anymore? Hi, everyone. Ian King here with your weekly market insights video. And the question we were asking this week is what the heck is going on with stable coins in the cryptocurrency markets? Before we get into it, I want to please ask you if you like our comment, go ahead and smash that like button. It helps us get our comment out to other YouTube viewers. And also, if you have any comments below, please feel free to write them in. I'm going to ask you some questions and hopefully you'll respond. Now, I asked the question at the top of this, are stable coins even stable anymore? First of all, what is a stable coin? A stable coin is a cryptocurrency that's pegged to a real world asset. And the majority of them are pegged to the US dollar. And the benefit of having a stable coin is it gives you something that you can transact in the crypto markets or you can use in DeFi and not have to go back to traditional, sources of cash like a US dollar or a euro. And you can use these tokens in DeFi. You can use them in a protocol, whereas you couldn't use a deposit that you have at Bank of America or Citigroup. Now, stablecoins have been in the news this week because of this blow up essentially in the Luna protocol and the subsequent UST stablecoin, which tracks the US dollar. I'm going to show you that chart in a moment. But I want to just say that there's a couple different kinds of stablecoins. There are centralized stablecoins, which are backed by reserves in a bank, and then each token is backed by a dollar in a bank. And then there are decentralized stablecoins, such as algorithmic stablecoins, which is what UST is. And what that does is it creates a mechanism by which to hold that stablecoin peg to a dollar or another real world asset. The problem with these decentralized stablecoins is that if people try to get their money out of the stablecoin all at once, it can lead to a downward spiral. And that's exactly what we saw this week in the Luna protocol and the UST stablecoin. Now, let me just show you a couple of charts. I'm going to go over the top 4 stablecoins, what they are, and how they've responded to market action like this. So first, I want to talk about UST. Now, I'm going to show you a daily chart of this. This is UST on Binance. And you can see that UST was pegged to a dollar right here for over a year. And just in the last week, the peg came off. It started really over the weekend when it traded about 97 cents to the dollar. And then they tried to repeg it. And then on Monday of this week, it started falling to 75 cents. And then it continued to fall. And right now it's trading at about 39 cents to the dollar. Okay, so for every dollar that you had in the UST, you lost 60% in something that was supposed to be stable. The main reason for this is that the protocol was encouraging people to use USTs, stake them, get 20% rewards. And there were traders that were just leveraging up into this trade. And as we've seen in any financial crisis, when you think something is risk-free, it causes instability because more people leverage into it. Okay, this is famous economist Hyman Minsky developed this economic theory in that anything stable will eventually crash because people try to lever into the trade thinking that it's risk-free. In reality, there is no risk-free trade in anything in the world, not even US government bond, believe it or not. And so this is basically, the 64,000 foot view of what happened in the UST protocol. Now, this is a decentralized stablecoin. It's controlled by an algorithm. It's not the first time that a decentralized stablecoin has blown up. Another one, which was founded by the same founder of this, called Basis Cash a couple of years ago, also had a similar problem. At that time, Basis Cash lost about $50 million, whereas opposed to UST was about $50 billion in losses. Now, let's talk about some other stable coins because this one is called Tether, USDT. It is the first or second largest stable coin with about 80 billion of them out there. And overnight, I'm filming this on Thursday, overnight on Wednesday night in the wee hours of Thursday morning, Tether started to become unpegged from the dollar. And this caused concern in the crypto markets. It led to people selling their Ethereum and their Bitcoin. And basically just on a rumor that Tether was going to be next after UST. Now, Tether is a very controversial stablecoin. It has been, criticized since its inception that it's not properly reserved in the bank. In other words, there are more tethers in existence than there are actually dollars in the bank. And this could be true. The last audit showed that there is only 10% cash that's backing Tether in the bank. So it's like a fractional reserve currency, essentially. But it has over 50% cash equivalent. So what the managers of Tether do is they back it with some type of short-term bond that can give them some yield as they issue these Tether tokens, cryptocurrencies. This one will be regulated by the US government because of the risk that this takes, whereas somebody is taking this cash in, they're investing it in something else. Now, the fear about Tether coming unpegged, I think, is worse than it looks. The reason for that is that retail investors cannot redeem Tether for the cash that Tether has. It can only be done by institutions. Tether, second most, is the largest stablecoin pair on FTX. And this is one of the largest crypto trading platforms started by Samuel Bankman-Fried. And they are, in the business of not letting Tether become unpegged to the dollar, because it would be very detrimental to FTX. It'd be very detrimental to their business. They just raised a ton of capital at about a $30 billion valuation. And so I think the game theory here is to suggest that it is very unlikely that Tether becomes unpegged. And the reason specifically is because of who uses it the most, and that's essentially FTX, and also that Tether is a centralized stablecoin. Let's now turn to DAI. Now, DAI is a collateralized stablecoin. Okay, it's a decentralized stablecoin, and it's backed by users that put some form of cryptocurrency in a smart contract, and then there are issued DAI. Okay, so you can take, let's say, $10,000 of Ethereum, and you can put it in the Maker DAO on a smart contract. And in exchange, you can get a percent of that back in DAI, which is a stable coin that is pegged to the US dollar. And the way this system works is that if the price of your asset, your underlying crypto asset, falls below a certain reserve price, okay, so let's say, you collateralize your Ethereum at $2,000, and it drops to $1,000, and I'm just making numbers up, this is a hypothetical situation, the protocol will sell your Ethereum to pay back your DAI loan. So far, this protocol has worked for 4 or 5 years. It's been tested. DAI is massive. There's $30–40 billion worth of DAI in existence. And it seems to be that DAI will be the decentralized stablecoin that actually works. And another thing about DAI is that it's now backed not so much by Ethereum and other crypto assets, but by USDC. And I'm going to turn to this, the last stablecoin, which I think is the safest one. It's issued by a company called Circle. This is a daily chart. You can see that it did unpeg itself last August, but then quickly moved back to the peg in about a day. So Circle is a company that has raised a lot of money. They've been working with regulators. This is a centralized stablecoin. It's the one stablecoin that I use if I'm transacting in the crypto markets and don't want to go back to US dollars. It's backed, every USDC in existence is backed by $1 in the bank. It's a US company. They're fully audited. And this is the one that I would recommend if you're trying to get out of crypto into something that represents a US dollar, but you don't want to leave the crypto markets. USDC is the one that you want to move into. It's readily available on Coinbase and crypto.com, and Gemini, and all the large exchanges have USDC. So that's the one I would recommend. So there you have it. This is the lay of the land in the stablecoin markets. And there are dozens of other stablecoins. A lot of them are much smaller. Many of them have become unpegged in the last week as a result of what happened with UST. But these are the 4 that you really need to know about and really need to consider. Like I said, I use USDC primarily, and also DAI on some of my collateralized Ethereum loans. Curious to hear your comments on this. Unfortunately, were you in the UST debacle that happened this week? Or do you have any other good places that people can get these stable coins and then stake them for yield? Love to hear from you. Hit us up in the comments. That's it for this week's update. Thanks everyone for tuning in, and we'll talk to you next week. Take care.